So we've got Falguni who's Managing Director at Kotak Investment Banking, joining us on the show. Falguni, to begin with, your outlook on the macro environment in India. What's the sort of growth that we are expecting for the next financial year, and what do you believe the major drivers are going to be?
I think we are expecting a 6.5 to 7% GDP growth. As you are aware, we have a large investor conference here at the Trident in BKC. And the messages, and it's a very interesting conference with a number of interesting speakers. And what one is able to assimilate from the conference is that, we are going to probably see a little bit of a liberal monetary policy throughout the world, including in Europe, as we've seen through ECB action. And the US will continue to have a pretty loose monetary policy, it being an election year. So I think with that and also US growth probably bouncing back to about 2 to 3% levels, we think it can be a good year for consolidation in India in terms of getting certain amount of FDI flows as well as FII flows if we have the right policy action coming through. And if that were to happen, I think about 7% growth should be easily achievable.
Afternoon, Falguni. Wanted you to touch upon your view as far as the global growth is concerned, because just some takeaways from Uday Kotak also, who earlier mentioned that the Eurozone problem seems to be the key concern facing the global markets, and that the US in comparison is in a relatively better position. Would you agree?
Yeah, definitely. We feel US is in better position on two counts. They are definitely going to see revival in growth, and it will be about 2 to 3% growth on a very large economy. So I think that's a 17 trillion economy, and that's pretty good news for the US. And with that coming into place, we feel that the global environment will not be as negative as what we saw last year, in 2011.
And with respect to the rupee, what's your outlook given that we are at a 3-month high? Do you see strength going forward in the currency, given also the kind of fundamental problems that the rupee has been battling with for some time now?
So I think rupee has been very volatile, far more volatile than what we should have. And in terms of what we expect is that I hope that based on some near-term FII and FDI inflow, RBI takes action to not allow rupee to appreciate too much, and I hope it keeps for benefit of the economy. It would be better if rupee stays around 50, 52 rather than appreciates too much, because every time it appreciates, it's appreciating on investment flows, which can get reversed at a future point in time.
So also, Falguni, given that you were fairly positive on the growth prospects for India in FY13, which are the sectors do you believe that will drive this kind of growth?
So I think while the fundamental growth, the consumption growth in the country is very strong, and we had a couple of really good presentations where we saw that what we are on the ground, India Inc. is seeing pretty robust growth driven by our demographics. But the key concern over next 1 year within India is going to be that we have tight monetary policy and loose fiscal policy. And loose fiscal policy will not allow our interest rates to come down too much, and our interest rates may at best come down by about 100 basis points. And if that were to happen, and we are also seeing the stress level going up, we had in fact Rupa Kudva come in and talk to us that how the rating outlook, how the ratings are, there are more downgrades now than upgrades for the first time since first quarter of 2010, and there is some amount of stress being seen in SME. And the banking stress also in terms of the NPAs is likely to go up. However, our banks are better capitalized and there will not be overall stress in the system. But there are certain sectors where they have seen, due to various reasons, far more stress, and everybody knows that. And those are, real estate, textiles, and a number of sectors, including infrastructure, where the stress levels are a little bit higher and the risks are a little bit more. And these sectors need a little bit more conducive interest rate environment and investment environment to be able to bring about some reversal.
Sure. And Falguni, just focusing on the infrastructure sector, which you just touched upon, It was a hot favorite until recently, but issues like coal supply, power issues, all of that is turning out to be a big hindrance. Your outlook for infrastructure, given that the rate cycle is beginning to turn, and hopefully there will be some outcome on the policy front going forward?
So if you look at historically, like over last 5 years, I think there was some reasonable movement in infrastructure, and based on our plan projection, and we had Vinayak Chatterjee talk to us about it from Feedback Ventures, that we saw that almost 78% of planned projects were getting completed, which is not such a bad percentage. But the current stress in the system and concerns for everybody, including investors, is based on the policy paralysis that we are facing now, where we are finding that very few projects are getting cleared, and with what's happening in the parliament, we are finding that very few projects are getting cleared, very few permissions are moving, and corporate India is getting a feeling that a number of policy decisions are not moving through, a number of clearances are not moving through. And if you look at the order inflows and order backlog, and those parameters are what are worrying. So it is looking ahead that we need to worry about investments. Investments have really come down compared to a year ago, and I think we have to achieve this reversal to put the economy back on the growth path.
So Falguni, with respect to the kind of positives that the Indian economy has seen as a whole, which one would you think would rank the highest in the list, given that there has been growth in exports, increased FDI, there has been an increase when it comes to the power capacity, high savings rate as well?
Yeah, so I think the biggest strength of India is the high savings rate. I think we have a very high savings rate. We have a pretty high, consumption growth also. So given our demographics with high consumption, high consumption and high savings rate, we are very well positioned compared to many world economies that need to be driven more by investment growth. So I think India is pretty well balanced on that front, and we have a certain, at our conference people were talking about that is Hindu rate of growth now 6 or 7%, and that's a really big positive compared to 2-3% that we used to talk about a decade ago. So I think Indian economy is well established on a growth path due to our demographics, due to our savings rate, and due to our consumption, which is all very well placed, and that coupled with penetration level increasing in many areas of consumption, I think we can benefit by continuing our, but there is a need for some amount of policy action and government clearance and all that to come into place so that the projects can move ahead and not get stuck. Because data on projects not getting cleared and getting stuck, and as a result the future investment demand coming into place, all that is really, really poor. And India today is quite self-sufficient in many areas like steel and others. Of course, on raw material we are still dependent, but refining steel because of historical investment that were brought about through very good industrial policies.
Right, Falguni, just one last word from you on the telecom sector. Based on what we saw coming out of the Supreme Court today, would you say that we can expect a re-rating of sorts of current GSM incumbent players?
Yes, the news currently seems to indicate that. So clearly that would be beneficial to the current incumbent GSM. But how this progresses from here, one will have to see in terms of, what Supreme Court decision we know, but how it progresses from here is going to be clearly needs to be seen.